Global share markets were higher overnight, mainly through the US and also through Europe. Much of the focus over the past 24 hours has come out of the International Monetary Fund meeting held over the weekend in Washington, D.C. Some of the developing world have accused the advanced economies of a currency war. The advanced economies have low interest rates at the moment, making their currencies very weak. The developing world, such as countries like Brazil, are seeing their own currencies much higher, affecting their export economies. They have also seen a lot of capital coming into their economies, which is meaning that they could see an asset bubble down the track. For similar reasons, the New Zealand dollar remains high against the US dollar, and on Tuesday morning we are trading over 75.5 cents against the US. There were few takeouts from the IMF meeting, but the IMF have maintained that they will go and look into the effects and see what the potential effects will be on the global economy. The US housing market remains weak, and now almost 1/4 of all home sales are due to foreclosures from banks. In some of the larger states, such as California, the figures are up around 45%. There have been some issues with the documentation with the mortgagee sale process, and this has concerned both federal and local governments. As a result of this, some of the largest banks in the US have now put a freeze on further foreclosures until the issues are worked out. In any event, this is likely to provide a bit of a drain for the US housing market, but also provide further uncertainty for the US economic outlook. Media reports over the past 24 hours are supportive of higher international meat prices down the track. The US beef herd is now at its lowest level since 1973. Breeding hogs are thought to be at the lowest level ever, and per capita supplies of beef in the US are also thought to be very low, potentially at the lowest level since 1952. With higher feed input costs now starting to come through, this is putting some pressure on some of the larger restaurant chains in the US. Wendy's have indicated to their investors that higher commodity prices will put a bit of a pinch on their profitability down the track. All this should mean higher beef prices back here in New Zealand, although there are some questions on the ability to pass this on due to the high New Zealand dollar.